Hello everyone, welcome to Simple Trade Club. In this video, we will talk about the simple trading strategy using Exponential Moving Average, EMA, crossover. But before we start, you can click subscribe button below, and you will get notification when we upload a new video. Now, let's get started. Exponential Moving Average, EMA, is similar to Simple Moving Average, SMA, measuring trend direction over a period of time. EMA is different from SMA. SMA simply calculates an average of price data, but EMA applies more weight to data that is more current. You can see the difference between the white line, SMA, and the yellow line, EMA. Now, we will test the two EMA crossover strategy. How to install the indicator. We are using TradingView to combine this indicator. Go to tradingview.com, or you can click link in description below and sign up for a free account. In free account, you can get access up to 3 indicator for free. Now, go to product and you will see the market chart. Click on it. Choose a currency pair and set the time frame to 30 minutes. Click on Indicator, search for Moving Average Exponential. Click the indicator twice, because we need 2 of this indicator. Change the input length to 50 and 200. Give it the different color. The rule of using EMA crossover. We will look for the 50-period EMA crossing the 200-period EMA. If the 50-period EMA crossing above the 200-period EMA, go for buy or long transaction. If the 50-period EMA crossing below the 200-period EMA, go for sell or short transaction. Now, you can see in the chart. The 50-period EMA is below the 200-period EMA. Wait until the 50-period EMA crossing above the 200-period EMA. When the 50-period EMA is crossing above the 200-period EMA, go for buy or long transaction. Set the stop loss to the last low of the market. Set the take profit 1.5 times, so we are using 1 to 1.5 risk-reward ratio. Let's see now. This trade hit the take profit. Now, you can see in the chart. The 50-period EMA is above the 200-period EMA. Wait until the 50-period EMA crossing below the 200-period EMA. When the 50-period EMA is crossing below the 200-period EMA, go for sell or short transaction. Set the stop loss to the last high of the market. Set the take profit 1.5 times, so we are using 1 to 1.5 risk-reward ratio. Let's see now. This trade hit the take profit. Backtesting EMA crossover strategy. Now, let's test the indicator for 100 times trade. The starting balance of this test is $1,000. We will use 1 to 1.5 risk-reward ratio with 1% of risk for single trade. If we loss, we will lose $10. And if it profit, we will get $15. We will do the test on Euro-USD market with 30 minutes time frame. Now, let's get started. Before we discuss about the result, please support this video by giving like and subscribing to this channel. That will keep me motivated to create new video. Now, we can see the result of the EMA crossover strategy. The EMA crossover strategy has 48 profit trade and 52 loss trade. It means on 1 to 1.5 risk to reward ratio, the EMA crossover strategy has 48% of win rate. The consecutive profit is 4 trade in a row, and the consecutive loss is 5 in a row. The account start from $1,000 and end up at $1,200 with 20% account growth. Pros and cons. Now we want to tell you the pros and the cons of this indicator. The pros of using this indicator is: the indicator is very simple to use. You only need to wait the 50-period EMA is crossing the 200-period EMA. But this strategy only have 48% win rate on 1 to 1.5 risk reward. When we compare it with the MACD indicator we test before, the EMA crossover strategy is not good enough. This strategy is not too good or not too bad. Because of the 1 to 1.5 risk reward ratio, the account still grow with this strategy. For another strategy, you can check our other video in our channel. So, that's all about the simple trading strategy using exponential moving average, EMA, crossover. I hope you can understand the content of the video and like the video. Please support this channel by giving a like and subscribing to this channel so we can develop in the future. See you in the next video.